Hello and welcome to this edition of the video market update from Orbex.com, and today in this video we will be discussing some technical analysis only, as fundamentals are a little bit short of this week, and actually last week we had just few fundamentals due to the holiday. So happy Easter to you all, and starting today with the US dollar index as always. And actually, this is a very interesting chart, despite the fact that we were looking for a head and shoulders formation for the past few weeks, which is the right shoulder in here and the head, and the left shoulder is here and the head and the right shoulder. But the neckline actually made it pretty clear and continued to hold, and also the dollar index jumped all the way above its 50 day moving average and peaked at the 100 day moving average, which also was a confluence with its daily downtrend for this year. So that's why we keep our forecast for the US dollar, or the view for the US dollar, on the downside, especially that the yearly trend line is on the downside and remains solid for the time being. Last week on Friday we had the US CPI figures, which basically showed the CPI and the retail sales, which showed another disappointment, which basically might be a sign that the US economy started to slowing down after the rate hikes. So at the beginning of Monday, we had a very deep or very sharp decline in the US dollar from almost to 150 all the way to 100, and it's still trading around that level until this report is released so far. But we still believe right now is a continuation of another leg lower in the next few days, at least this week, supported by weak fundamentals and the tensions around the world. Also, this would be another reason to keep on selling the US dollar, probably toward again on the medium term. Let's say I'll be looking for another dip lower all the way back to 98.89 or the previous lows, but for the time being the support area remains at around the 99.60s after we break through the 100 barrier. So keep that in mind, and that's why again this week we're still looking for more decline in the US dollar. Going into our weekly also charts for the for some of the products that we were covering for the past few weeks, beginning with the Kiwi. Again, we're still stuck within the same tight range for the time being for the past also 6 weeks. But at the same time, we have some sort of a double bottom on the weekly chart with a very positive candle on the weekly, also on the weekly chart last week. Technical indicators are heavily oversold, and the RSI is closing toward the 50, which basically gives it a little bit of more positiveness for the time being. But the 50-day or the 50-week moving average remains very also solid for the past few weeks, which is around for the time being 71. But the tight range remains the same between like 68 and 73, which is like 500 pips since almost a year now. That's why I still not preferring to trade these currencies, whether the Aussie and the Kiwi. But I would be looking to, or I'll be waiting for any breakout, whether a breakout or a breakdown above the 73 or even the 68, before taking any decision in the next few weeks. But for the time being, the bullish sign is actually here. So there might be a possibility to retest the 71. So a long position with the 71 target, while with a stop below this week's low would be reasonable. As for the Aussie, again, we stayed above the 50-week moving average again. Last week we had a retracement to the upside, but so far we have a strong start at the week, but it's still the same as I said before. The Reserve Bank of Australia is not letting the Aussie to go higher as much or any further above the 77 20s or even 78. So actually for the time being, even with the US dollar outlook is still bearish, I still believe that the Reserve Bank of Australia will keep the Aussie below these two levels, 76.32, 77 or 78. So there might be a chance to retest the highs again, especially that the US dollar also outlook remains negative. But still, selling the rallies would be the same strategy for the time being, unless we see some sort of a break or a breakout above the mentioned levels in here. Going for the euro was very clear for the past few weeks, and actually especially last week. Last week we had a test to the uptrend line, which is basically after we failed to break above the 200-day moving average, we continued to decline all the way back below the averages. But the daily trend line support continues to be very supportive, and the euro actually added more than also 0.4% during the first trading day after the holidays. And we expect another move on Tuesday at the beginning of the European session, probably above, or to see some sort of a breakout above the resistance area, which is currently right now trading around some sort of around the body, which is today's high, also 06 or 106.7072. I still believe that there will be some sort of another rally all the way to another high, probably toward 107 to 107.25, which represents a very strong resistance. But for the time being, the outlook remains very positive on the euro, especially that the RSI is picking back up, also almost above the 50, and the stochastic is turning still higher. 107 and 107.30 would be our weekly target. Dollar yen is very technical again, very technical levels, but we break through the 50-day moving average, the 200-day moving average on the daily chart also last week. This week we tested the daily moving average at the beginning of the trading session at 108.75 and continued all the way down, but still we had another tick higher, 108.50 so far. But the 61.8% Fibonacci for the recent rally that we've seen back in November until the highs of December, the 61.8 stands at 107.90. So I believe this level would definitely show some sort of a bounce from those levels. But at the same time, don't forget also the technical indicators will have the overbought. So there's a possibility to test the 107.90s, but from that level I would be looking for another bounce on the short term. The British pound is making another very important move this week, breaking above one of the trend lines, or one of the downtrend lines on the daily chart. But at the same time, we still have a confluence here at another downtrend line of the daily chart, which basically confluence with the 200-day moving average. At 26.32 would be a very significant level for the British pound in the next few days. Probably, maybe even tomorrow, we might test that level, especially if the volatility is higher after the holidays. But I will be interested actually to reshort the British pound, and I still believe the British pound will be one of the weakest currencies this year because of the Brexit, and Brexit negotiations not going to be that easy. So selling the rallies 126.30s would be reasonable for the British pound until at least to retest the 125.50s all the way back down. Finally, the Aussie and the gold and silver. Gold managed to break above the 200-day moving average last week and continued all the way back up. And then this week, actually, we started the week slightly higher, nearing the 1300, but failed to break above that resistance, or even like to break, and continued all the way back down, and closing the day actually around 1288. However, there's still a trend line resistance here. We broke one of the trend lines here, the downtrend lines. But it's still, this is a level where I would be expecting some sort of a pullback, at least to see some sort of a retracement or profit taking before the uptrend continues. But for the time being, the uptrend remains, and the outlook remains positive as long as it stays above the 1200 or the previous lows, which is 1194, I guess 1194, 1195. That's why also the technical indicators are heavily overbought. That's why I would be expecting some sort of a pullback at least before the upside continues. The immediate resistance level is about 1300, which is the psychological resistance, followed by 1304. Finally, as for the silver, it continued also to break higher, just like gold. At the same time, we broke above this year's high finally, and also closed last week above that resistance, which is very positive. But at the same time, we failed to continue this week on Monday. That was Friday, and this is Monday. And I still believe there might be also another pullback also for silver, especially again technical indicators are heavily overbought. So I would be still looking for another leg higher, or another rally all the way back up, maybe toward 19. But first, I would like to start buying the silver again above 1830. That would show some sort of a buyers, or so we might see some sort of a profit taking after last week's rally. So 1830 would be our entry level, or for another spike higher all the way back to the $19, but before that we have to break above the 1870s and also the 1890s. So that's it actually for this week. This week again we will covering only technicals, but we are short on fundamentals this week. But we will definitely update you regarding the French elections and all of the other events during the week. You can follow us again on our social media sites or Orbex social media sites, and if you have any questions, you can leave it below in the comments on YouTube or even on Facebook or even on Twitter. Thank you for watching, and I'll see you once again next week.